Happy weekend, everybody. Just when you thought after a hard week in the markets, man, it's the weekend. Finally, good things gonna happen. You gotta see this guy. You have no luck at all. In today's video, we're gonna talk about gold. We're gonna look at gold. We got some good news. We got some bad news. We're gonna look at the dollar. We're gonna look at oil. We're gonna look at the bonds. The things that we need to know about that influence the gold price. If we have time, we're going to look at silver. Let's jump right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to the show. My name is Daniel Wilhelmi. I hope you started your Friday off, well, I don't know, with your favorite food, maybe some dancing, enjoying some of your favorite songs, watching a great show. I watched the last episode of House of Dragons yesterday evening. Great show. Yeah, if you're a precious metals investor, feels like you got the dragon fire to the face in the past week. Okay, so let's get right into it with a daily chart. Let's start with a good. This is the daily chart. And as you can see, on Thursday, we closed below 4K for the first time since the start of the whole correction phase at the end of January. Now, this is significant because closes are important. And as you can see, if I zoom out on the daily, you see here on Thursday, that's basically the lowest close that we have had since the beginning of November. So this is a significant sign. However, on Friday, you see the green candle. Institutions in the US pushed gold above 4K. I assume that it's institutions. I can't prove that because there is no reason to think that retail is able to move the gold price after it closed below a significant zone like 4K. Maybe it was central banks buying. That could be the case. Either way, someone big wanted the gold price to close above 4K, and they did that. However, we got the new low on the close. Now, again, first positive thing is someone big bought on Friday and made sure we closed above 4K. That is very positive. Second positive thing, we made a new low on the daily close, but we did not make a new absolute low, not a new intraday low. That is still from June 30th. So that was not even close to get undercut. What other good news do we have? Well, I like the color of my tie. That's pretty much it. Except for one thing, and that is that the positive divergence, as you can see in the bottom in the RSI, held again and it is moving up. But as you can see on the upper end, we're getting weaker and weaker. We're basically running into a triangle formation. Yes, the selling pressure is easing off in the RSI. That's what the RSI tells us. But there's no buying dynamic yet. So let's get into the weekly. And on the weekly, very easy to see, we had a new weekly low close. Yes, it was above 4K, but it's a new weekly low close in this whole correction. And it's the lowest close since, that is even higher. So we got to go with this one. So the beginning of November, that is not a great sign. So that tells us the strategy that I laid out 2 weeks ago, where I said, hey, maybe 4K is the low. And maybe we have seen the low already, and we should at least have a foot in the door. And as you know, I told you I bought 2 positions. Am I down on both of them? Absolutely. Not dramatically, 5% or something like that. But that's not the point. We are trying to invest here like institutional money, like smart money. And they simply look at it from what are the probabilities here? And the probability had risen that 4K may be the low. So it's smart to put some money into the market, not all of it, not even the majority of it, as I was telling you, but to at least have a foot in the door in case that is it. And this situation is still in play. We saw it on the daily close. However, with this weekly close, we have to say that the undercut, liquidity grab, panic sell-off is still the favorite scenario. That is still a favorite scenario to play out. And Hagen made a good point. He asked me at the Rules Symposium, hey, Daniel, can you put percentages on your price move predictions? And he's right, and that is the right question to ask. The problem is that private investors tend to see one prediction for price or for a percentage of a price move and then don't account for the dynamics of the market and that things are changing every day and therefore the percentages are changing. So this only makes sense on the weekly charts in our case. And if you ask me what my percentages were, I would still say 65-35, we're going to get the undercut. All right, 35% that this was it, this was the fake out, but we didn't get the, let me get to the daily to show you what I mean. Well, actually on a weekly we can do it too. We didn't get this, right? We didn't get this panic sell-off that then got bought up. That is a typical type of liquidity grab here. Panic sell-off, liquidity grab got bought up that Wall Street loves to do to push the private investors out and to gobble up shares, or in this case gold, on the cheap. So I still think 2-1 we're gonna get this undercut. Now let's take a look at, and by the way, interesting, down this line here is from the dailies. Obviously TradingView doesn't adjust it, but if we adjust it to the weekly, then we're starting to see we're starting to get a positive divergence in the weekly as well. It's very slight, it's just starting, but we're going to keep an eye on this one. So dollar. We know the dollar is a big one. The dollar is not, because gold and the dollar have a negative correlation. If the dollar goes down, gold historically goes up. Now, more important, obviously, are the yields in the yield curve, but a lot of investors just look at the dollar. So, what do we see here in the dollar? This is looking interesting. We see a triangle formation. The dollar's running into the top of it, and we see on the weekly we have a breakdown. Now, if we go to the daily real quick to get a deeper look in it, we see we had the breakdown. I told you about it. We haven't confirmed it yet. We retested the uptrend that is very typical after important breakdown. If we go lower and confirm, so meaning we're going to close anywhere below these candles, so anywhere in this region right here, we're going straight down to the 50 and maybe even lower. Definitely parity. So that could offer some relief for the gold price, and that obviously would then help strengthen the case that 4K could hold. Let's look at oil. This is where things get really interesting. Let me switch to the weekly here, and here's the weekly on oil. Man, that's a big time candle. If you didn't think things turned around on oil, and I don't know what you were watching, because we were talking here at Hot Trades of the Day like 2 weeks ago. Look at energy stocks, look at oil, things are turning around. If you missed the video, hit the subscribe button so that doesn't happen again, because you could have made really easy money, and that was really easy money in the energy stocks. Some of them look great. We're going to talk about it next week. So again, hit the subscribe button so you're not going to miss this video. This is a great candle. What do we want, right? This is as good as it gets on the weekly. We regained the 200 weekly day moving average, the golden line. We broke the downtrend. We broke that new resistance zone, the silver line that we drew in here. We have the gap fill right here. You're familiar with it if you watched the previous video. But more importantly, we are now clearly settling in a new zone for gold. Now, it's really volatile right now, but that is very normal when a commodity is trying to find a new price level. So I'm going to go more into this in the upcoming oil video, so make sure you don't miss this one in today's video, because I don't want to steal too much time of your weekend. Just oil going up, therefore inflation worries gonna increase. Now this leads us to the bond market. And with the bond market, I haven't really dove in too deeply into the bond market, because it's boring for most private investors, though it shouldn't be, and it's a little tricky to understand. So real quick, the short-term bonds, government bonds for 2 years, those are the ones that the Fed can control with the interest rates. The long-term bonds, 10-year, 30-year, the Fed cannot really control. That's where the market sets the prices. That's why I like to look at the long-term bonds, because that tells me what the market really thinks is happening. But what is important, especially for gold, is what's called the yield curve. So that's the difference in interest rates between the short-term bonds and the long-term bonds. So let's look at the 10-year and the 2-year. Where do we stand here? Because that is what is measured in the yield curve. So let's start with a 10-year on the weekly, and you see we broke the downtrend. It goes all the way back to 2023. We can cross this one out because it's broken already. But this week we had a very similar candle as we did here, where we didn't confirm on the weekly, and we're going down. Looks almost identical. 30-year, even more interesting. We ran into this resistance zone, and now this looks very much like we're going to take at least a breather, which again would be good for gold if the 2-year, the short term, goes down as well. And what do we see on the weekly at the 2-year? This is the 2-year. We see, this is interesting. We're doinking off the 200 weekly moving average, and right in this resistance zone, you can see it here. And we are also seeing, oops, sorry about that. I wanted to move this. Here we go. There, this is what I want. We are also seeing a negative divergence in the RSI. So the 2-year bonds are going higher, but the RSI is declining. Now, still in the buy area, obviously, but we see momentum is fading. So, what does that mean for gold? This means overall, on the technicals, the percentage is much higher that we're going to get the undercut, the panic selling, the capitulation, whatever you want to call it, that we want. Now, the price zone that you hear the most right now is 3.7. I think that sounds very realistic. I would agree with this. And then obviously 3,500. That's where most of the buy orders are. In the market, when you have an area where everybody and their mother thinks this is the area, this is the support zone, which in this case is 3,500, the market never, almost never, nothing is 100%, but almost never stops exactly at this area. Either we're going to get an undercut, highly unlikely, based on the fundamentals of gold, and the other factors that I just showed you, or we're going to turn around before we even reach it, which that is the sneaky move of the market. Because if you have all the buy orders there for a commodity or an equity where the fundamentals are clearly bullish, then the nastiest move is to turn around before all these buy orders get triggered. So all these people that wanted to buy at 3,500 or want to be really smart and put in 3,501 get nothing and then are forced to jump into the market at higher prices. I still think 3.7, that sounds realistic as the undercut zone. So that would be $300 an ounce. Yeah, I can see that happening quickly, pretty easily. And then the gold price recovering, especially if the dollar goes lower, if the 2-year goes lower and corrects and goes lower faster than the 10-year. So therefore, the yield curve declines. This was not a good week for gold. There's nothing to sugarcoat. I wish I could tell you something else. But I like to give it to you straight here at Hot Trades of the Day and tell you what I see and not, right? As I always say, we got to trade the markets that we have ahead of us, not the markets we wish we had. I wish we would trade a market at gold 6,000 and the only question was, are we going to 6.5 or tomorrow or on Tuesday? Not the case. So Friday was an important signal. There's no denying that. The US, someone in the US held up the gold price and made sure it closed above 4K. That is an interesting signal. It did not help us much in the weekly chart, which shows us how bad the week was. So be on the lookout for next week. Things might change very quickly. Again, you know the zones that we need to pay attention to, and I'm going to give them to you, and then we're out of here. The zones that we need to pay attention to, you see them on the daily, is obviously now the downtrend plus 4,070. We get above that, that is the first big indicator that things are changing. And then we definitely have to adjust the probabilities, which again are now, in my opinion, still 2-1 in favor of the undercut. And then obviously the big one, if I say it one more time, I'm probably going to need therapy, 4,215. So those are the two signals first, and then we got the 50-day coming down afterwards. That is it for today. No time for silver, because I want you to have a great weekend and not think about the markets. We're going to talk about silver next week. Again, we're going to talk about oil and energy next week, because you saw the chart. Big things happening there. We're also going to talk about lithium. Whew. That's it for today. Have a great weekend. Bye-bye.